today's financial market update. The most important market insights you need to know. Market sentiment is mild. Market is performing well across major indices. Index performance, S&P 500 at plus 0.07, Dow Jones at plus 0.12%, NASDAQ at 0.21%, Russell 2000 at 1.32%. The stock market is currently bullish, reflecting a 232.87% surge in RIME due to positive biotech trial results. The strong performance of RIME showcases investor optimism in biotechnology, suggesting potential growth opportunities in health-related stocks. Consider increasing exposure to biotechnology stocks like RIME, which are showing promising growth based on clinical advancements. Recent data shows a slight decline in the Consumer Price Index, indicating an easing of inflationary pressures for January. The decline in the Consumer Price Index suggests potential stabilization, but investors should remain cautious about sustained inflation impacts on spending. Consider diversifying into sectors that historically perform well during inflationary periods, such as utilities and consumer staples, which can provide stability. Rivian Automotive achieved a gross profit of $144 million in 2025, solidifying its position in the electric vehicle market. Rivian's strong profit indicates growing consumer demand for electric vehicles, signaling potential long-term growth for the EV sector. Consider investing in Rivian as it demonstrates profitability, aligning with the increasing trend towards sustainable energy solutions in the automotive sector. Consumer confidence has shown volatility, influenced by rising inflation, which reached 3.7% in January 2023, affecting overall spending habits. The decline in consumer confidence signals potential challenges for retail and tech sectors, suggesting that spending may continue to slow down in the near term. Consider reallocating a portion of your portfolio into defensive sectors like utilities and consumer staples to mitigate risk during economic downturns. The effective federal funds rate has decreased from 4.33% to 3.64% over the past 12 months. A declining federal funds rate typically signals a more accommodative monetary policy, which can enhance overall market liquidity and investor confidence. Consider increasing exposure to interest-sensitive sectors such as real estate, as lower rates may boost property values and rental income. Global GDP growth projections have been adjusted down to 2.5% for 2023, reflecting rising inflation and economic uncertainties. The downward revision in GDP growth suggests a more cautious investment climate, signaling potential volatility in equity markets. Consider diversifying portfolios to include European equities, particularly in sectors poised for growth due to increased investment. The silver market is consolidating after a sell-off triggered by a hawkish stance from the Fed chair. The consolidation in the silver market indicates potential short-term volatility as investors react to U.S. economic data and Federal Reserve decisions. Consider accumulating silver positions gradually during price dips to capitalize on long-term bullish trends driven by industrial demand. The Reserve Bank of India, RBI, has implemented stricter loan rules for brokers to reduce speculative trading activity. The RBI's tightening measures are aimed at enhancing market stability, which may provide a more predictable trading environment for investors. Consider diversifying portfolios by incorporating European assets to leverage potential growth opportunities amidst U.S. market volatility. Ford is in negotiations with the Trump administration regarding joint ventures with Chinese automakers in the U.S. market. Ford's joint venture proposal may signal a shift in U.S.-China relations, affecting investor sentiment and the auto industry's competitive landscape. Consider diversifying investments in the auto sector by exploring companies with strong U.S. market positions, like General Motors, amid Ford's uncertainties. ConocoPhillips anticipates nearly doubling its free cash flow to $12 billion by 2029, driven by LNG investments. The increase in free cash flow from ConocoPhillips signals a strong focus on LNG, potentially making it an attractive investment sector for the future. Investors should consider allocating funds towards LNG projects, as they represent a growing segment with promising cash flow projections. The Pentagon briefly listed Alibaba as a Chinese military company, heightening geopolitical tensions surrounding the firm. The classification of Alibaba as a military company indicates increased regulatory scrutiny, which may lead to volatility in its stock and investor sentiment. Consider diversifying portfolios with tech stocks, focusing on companies like Alibaba that are investing heavily in AI and innovation. Long-term Treasury bonds saw a significant rally, with yields dropping to their lowest levels in months. The increased demand for bonds suggests a prevailing risk-averse sentiment, indicating investors are prioritizing safety over potential equity gains. Consider allocating a portion of your portfolio to long-term Treasury bonds to capitalize on their current upward momentum and lower risk profile. National rents saw a decline in January, but overall rent levels remain elevated, impacting affordability for many renters. The decline in rents may indicate a cooling rental market, which could lead to increased demand for home purchases among renters seeking stability. Investors should consider purchasing rental properties in areas experiencing declining rents, as this may create opportunities for increased cash flow in the long term. Apollo Global Management stock has risen by 10% this year, reflecting strong performance in private credit strategies. Apollo's rising stock indicates a growing confidence in private credit, suggesting it could be a reliable investment avenue amidst economic uncertainty. Consider allocating a portion of your portfolio to private credit funds, especially those focusing on technology infrastructure for potential high returns. Deere NYSE is focusing on AI for autonomous farming, enhancing its digital revenue post-Tenna acquisition. Investors should note that Deere's investment in AI reflects a broader trend towards automation, potentially leading to increased market share and profitability. Consider investing in Deere as it leverages AI in agriculture, which may enhance its revenue streams and stock performance. New tax reporting requirements for crypto investors will be implemented by exchanges like Coinbase and Robinhood starting next fiscal year. The introduction of new tax regulations may lead to increased compliance costs for investors, impacting trading volumes and liquidity in the crypto market. Investors should consider diversifying their portfolios by including crypto-related stocks that show resilience and potential for recovery in the current climate. CMS Energy reported an adjusted EPS of 3.61 cents for Q4 2025, reflecting growth in its Northstar Clean Energy segment. The strong performance of CMS Energy signals investor confidence in clean technology, suggesting a favorable environment for further investments in renewable energy. Consider investing in CMS Energy as it demonstrates significant growth potential in the clean energy sector, making it an attractive option for long-term investors. Thank you for watching FERPA, your financial Sherpa.